Google's results are out, and we have updated our model to include the March quarter end details. So in this video, we're going to take a look at the results and see if that price move in after hours of about 5% decline makes sense or not. So on the right-hand side of the screen, we've got our new updated model. On the left-hand side, we have the model that we had earlier today that was calibrated to meet consensus estimates. So you can see that this was still, the March quarter was still an estimate column, and in this final model, we have the actual results here. So let's take a look through each of these items. Let's just start by going through the press release, and a couple of things to point out. Actually, it might be easier if we just stick to the comparison to the consensus. So first of all, if you look at the revenue net of traffic acquisition costs, the consensus estimate was $16.5 billion, and they came in a little light, but pretty much in line with consensus estimates. And then if you take a look at the final Class A and Class C diluted non-GAAP EPS, the estimate was for $7.97 a share, and they came in at $7.50. So a little light there as well. So now let's go through each one of the segments. If we take a look at the ad revenue for Google websites, so that was down 4.1% for the quarter, and that's quarter over quarter from the December quarter, which, remember, December is always a strong quarter due to typical seasonality with that holiday season. And prior to this release, we were modeling our growth at down 4.4%. So it was actually a little bit better for the Google website ad revenue. Cost per clicks, we were actually kind of surprised to see that this was up 2%. And that's quarter over quarter, so granted it was down pretty steep in December, so maybe that's partially why. But still, we would have expected the trend to continue to see that cost per click to go down. Then if we go down to ad revenue for Google Network, that was down we had modeled down 4%, and it was down almost 11%, so we kind of missed the mark on that one. And then Google Other Revenue, we had modeled that down 4%. And it was actually down just over 1%. So there's sort of some puts and takes between the Google Network members' revenue and other revenue between what we had originally anticipated. All in all, the final revenue was just a little bit lower than what we were expecting. And then if we go down to other bets from there, other bets, not a major contributor to overall revenue. So we had forecasted a decline quarter over quarter of 5%, and it was actually up 10%, but again, because the revenue base for other bets is so low, it doesn't really have a huge impact on overall earnings. Next, we can go down to the breakdown of traffic acquisition costs. So we were expecting TAC to ad revenue to be about 21.2%, and it was actually a little bit better than that at 21% even. So that's a good mark. Then other costs. Cost of revenue was 19%, and we had modeled 18%. So again, some puts and takes between TAC and other costs of revenue. The net impact was about what our model had expected. Next, we move down to the OpEx items. So R&D and sales and marketing as a percentage of revenue both came in higher than what we had previously modeled. And general and administrative expense came in a little bit lower. So we had modeled 9%, and it came in at 7.5%. So here's another interesting one. Interest and other income was actually negative again this quarter. So in our preview video, we had mentioned that there were some one-offs in the fourth quarter of last year, which caused it to be an expense. And we weren't anticipating to see that again. It actually would have been better off had we modeled it based on that one-off quarter, that 4Q result, because we're seeing a similar result in the first quarter. So we're going to listen in on the call, which is going to start soon, and see what exactly was going into that number that made it negative again, because it's not typically, if you kind of look back through history, it's usually an income item. It's not an expense item. So that'll be interesting. And actually, as a percentage of revenue, it was even higher than the fourth quarter. So there must have been some other one-off item that management will probably discuss on the call. Next, we go to the tax rate, and that was another item in our preview that we had mentioned where there was a one-off in the fourth quarter, and fourth quarter it was about 5% effective tax rate, and we basically said we ignored that, so we are modeling 20% tax rate, and in reality it came in at 18%, so not a huge difference between our previous model and the actual results there. Then let's scroll down to the non-GAAP items. So we have stock-based compensation breakdown, and we had modeled 1.4 billion and it came in at 1.5 billion, so a little bit more than what we had originally anticipated, but not a huge difference overall again. And then for the cash and marketable securities, we do an adjustment for the overseas cash balance. We kept that at about 58% of the total cash. So we'll listen on the call to see if they actually disclose that. They don't disclose it every single quarter. But for the time being, that's a approximation of the overall cash balance. And then we just do a basic tax adjustment. So we know that if they repatriated those funds back to the United States, they'd have to pay a tax penalty. So we just take about 20%, which is close to their effective tax rate, against that overseas balance as a somewhat of a approximation of what that tax liability might end up being. And we use that in our valuation because we're actually valuing cash separately from the equity. So once we do all that, the final share price comes in at about $755. So not quite as low as what we're seeing in after hours right now. But it's consistent with the move that we are seeing. So ahead of this release, shares were trading at about 20 times the next 12-month consensus EPS estimate, and that got us to the $778 price target. And now with the updated information for this quarter, it's at $755. So this valuation model, including tonight's results, has been saved to our website, gutenbergresearch.com. So if you want to download it for free, you can visit our homepage and click on the Models tab. And then from there, you just scroll down to the alphabet model and click this icon over here, and you can see it downloads right away. And you'll be able to plug in your own assumptions in the blue cells and see what the impact is on earnings in the future periods. And we'll also update this after the analysts have submitted their models, and we'll recalibrate this to meet the new consensus estimate when that comes out in a few days. And be sure to check back at that point so you can get those updates. And check back later on. If anything interesting happens on the call, we'll update this again to reflect those final results. Thanks for watching, and good luck with the rest of earnings season.